Hello everyone, how are we all doing this morning? Guys, are we serving decaf coffee? Come on, I've been doing this for 6 years. I need more energy. Come on, how are we doing? All right, thank you very much everyone for coming out to Digital Asset Summit. My name is Ippolito. I'm one of the co-founders of Blockworks. We're a media research and data company. We're the host of today's event. So this will be the 6th time that we've hosted a Digital Asset Summit across both New York and London. And over the course of the last 6 years, we have been laser focused on answering one very specific question, which is, what does the future of institutional adoption look like for crypto? And I feel very lucky. This is a good day for old Mike Ippolito, because I am speaking to you at what I think is a very auspicious time and an inflection point in our industry. Because the answer to that question has never been more interesting or more relevant than it is in this very day. And to answer why that is, I want to take a brief 30-second recap of some of the historic events of the last 12 to 18 months. So last January, after almost a decade of waiting, we finally had the acceptance of 9 Bitcoin ETFs go live in the United States. And over the course of the next 12 months, ending in December, those ETFs would go on to hold over $130 billion worth of assets, briefly eclipsing the amount of AUM that are held in the gold ETFs. So no matter how you slice it, that is a historic event and a strong data point in institutional interest and adoption of crypto. Flash forward to November of last year, and we had the first election of the election of the first openly pro-crypto United States president in the form of Donald Trump. And over the course of the last couple of months, we've seen a slew of positive developments for this industry, some of which were executive orders. So we had the repeal of SAB 121. We had the establishment of a strategic Bitcoin reserve. Never thought I'd see the day for that. And we've also seen the advancement of 2 landmark pieces of legislation, Bill Hagerty's Genius Act, the stablecoin bill, and the FIT market structure bill. And so, given everything that I just told you about the last 18 months, you would expect sentiment in this industry to be at an all-time high, right? Everyone should be really happy coming out of their shoes. And I would expect that many of you in this room probably are, actually. Because we've had an enormous amount of new RWAs, so stablecoins and treasuries and private credit getting issued on-chain every single day. We've finally seen the adoption of institutions that we were talking about back in 2017, so BlackRock, Robinhood, Citadel. Every single day, someone new is moving into this space. But it's not the same across the entire industry. And there are other corners of the industry that are not feeling quite so good and are actually at depressed sentiment levels. Many new assets did not reach their previous all-time highs. And there's a general feeling outside of the more institutional parts of the space that we didn't have much 0-to-1 innovation. We didn't make anything new this last cycle outside of perhaps meme coins. And so, what we're increasingly seeing is a tale of 2 cities emerge in crypto. And there is a divergence as the center of gravity inexorably moves closer and closer to our institutional counterparts. And so, what we're going to look at over the course of the next 3 days is, why is this happening, and what does this mean for the future of crypto? And so, over the course of the next 3 days, I want you to pay attention to 3 major themes as we endeavor to answer this question. Number 1, stablecoins and RWAs. So this is an undoubtedly bright spot in the future of crypto. We have over $250 billion worth of RWAs that exist on-chain today, 230 billion of which are stablecoins. But we've also seen treasuries, private credit, et cetera. And over the course of the next couple of days, you're going to be hearing from issuers, you're going to be hearing from service providers that are dealing with risk and liquidity, and you're going to be hearing from builders and investors that are advancing this space. Not only how it's going to work on a technical level, but the future of stablecoins and how they're going to interact with the US government as buyers of treasuries. Number 2, you're going to be hearing from investors. So I already mentioned that although Bitcoin is close to its all-time highs, many assets in crypto, including major L1s like Ethereum, failed to reach new all-time highs, both in US dollar terms and in Bitcoin terms. And so investors are going back to the drawing board. They're getting more rigorous about how they look at L1s, L2s, infrastructures and applications, and they're beginning to build a fundamentals-driven valuation approach to this space. So you'll be hearing from both managers and allocators about how they're thinking about not only the last 18 months and some of the lessons learned, but what the future is going to look like for some of these new digital assets. And finally, we're going to be talking about regulation. So can I get a show of hands? How many people were in London this last year? All right, very good showing. Thank you all for coming out. It's like a day. That's excellent. So I got on stage at the beginning of that event, and I kicked off by saying that we are seeing the worst regulatory environment in the United States in the entire history of the industry. Flash forward to today, and we've done a complete 180-degree pivot. So there were 33 enforcement actions brought against US companies alone over the course of the last year, the vast majority of which have been reversed. So these are landmark enforcement cases brought against the likes of Uniswap, Coinbase, Kraken, et cetera. And we've seen a more positive leadership position put in at the SEC and other regulatory bodies. And the posturing from this administration has been binary. It has been, come to the United States. We want to make this the crypto capital of the world. And so that's undeniably positive, but still questions remain. Is this a stance of non-enforcement, or are we going to build more lasting legislation that companies, founders, and investors can depend on? If this is just non-enforcement, can this be rolled back or changed by a subsequent administration that's not so positive on crypto? And so like many things in this industry, the devil is in the details, and over the course of the next couple of days, you're going to be hearing not only from founders and investors, but also policymakers themselves on the lasting changes that are happening in the United States crypto scene. And so as I start to wind down this long and winding speech here, what I want to leave you with is a note of optimism. Many of us got into this space for different reasons. Maybe there was a libertarian ideology. Maybe you liked the risk-reward profile of building in crypto. Many of us just wanted to build cool new things that were impossible to build before. And so I'm speaking to you at this moment on the precipice of what many of us in this space got into to do, to build cool things, to scale businesses to a global perspective and do things that were not possible before. So the next couple of years won't always be easy. It's not going to be linear, but every single person in this room should be coming out of their shoes excited about the opportunity that is in front of you, not only for crypto, but specifically crypto in the United States and New York. And we are so, so excited about that. So without any further ado, that's what I want you to listen for in the next couple of days are those themes. As a reminder, Digital Asset Summit is a 3-day conference. There's going to be main stage programming in the morning and then side stages in the afternoon. That is as long as I can hear myself ramble in front of you. Guys, thank you. Give yourself a round of applause one more time. Thank you all for coming out. And on that note of optimism, I'm going to hand it over to our first speaker, Meltem Demirors of Crucible, for an aptly titled talk, Believe in Something. Thank you all.